In this video, I will discuss about modified internal rate of return. What is the meaning of modified internal rate of return? Modified internal rate of return is a financial measure used by firms and investors to calculate the cost and profitability of a new investment or project. It rates investments and projects based on the opportunities they provide and eliminates capital budgeting errors caused by RRR. Unlike RRR, which misleads investors into expecting bigger returns, MIRR provides a precise assessment of the ROI investors can expect. It ranks investments based on their opportunities and eradicates all issues arising due to multiple IRRs for the same period. The three approaches that use to compute MIRR are discounted approach, reinvestment approach, and combination approach. Let's move to the Excel sheet to see a live demonstration of calculation of MIRR. Here you can see on the screen that Podda company has two projects, Project GHI and Project RST. Here $60,000 is the initial investment or cash outflow of Project GHI and $70,000 is the initial investment or cash outflow of Project RST. From year 1 to year 5, these are the cash inflows of Project GHI and these are the cash inflows of Project RST. Cost of capital is given 10% and reinvestment rate is given 10%. We have to calculate modified internal rate of return of both projects. To calculate modified internal rate of return of project GHI, at first we have to put equal sign, then type MIRR, double click on it to see the function. Then we have to select all the values of this project including its cash outflow as well as cash inflows, then put a comma, then we have to select finance rate as cost of capital 10%, then again comma, then we have to select reinvestment rate 10%, then close the bracket and press the enter key. As you can see that modified internal rate of return of project GHI is 25%. In similar way, you can also calculate modified internal rate of return of project RST. Now the question arises that among these two projects, which project should we accept? We can solve this situation in two ways. One is theoretical way and another is functional way. In theoretical way, the project with higher MRR should be accepted, others will be rejected. So we can say that project GHI is acceptable because its MIRR is higher than project RST. Now I will show you the functional way. At first you have to put equal sign, then type if, double click on it to see the function. Then here MIRR of project GHI is greater than MIRR of project RST, then put comma, then select project GHI, again comma, select project RST, close the bracket and press the enter key. Here is the result which is shown to you. Thanks for watching my video.